Okay, so let's talk about the stocks I'm considering buying in August. Okay, so the first one is a copper stock, Oracle Resources or Oroco Resources. Some people say Oracle, some say Oroco. Anyway, that's not important. So that's the first stock I'm considering buying this month. Now, why? Because, I think Oracle stock is really, really cheap, as you will just understand. But I think that here I would be buying a very, very undervalued asset. So here's what I mean. As you can see here, Oracle's market cap stands at 84 million US dollars. 84 million US dollars. Now, what are you buying for that amount? That's the question. So, for 85 million US dollars, you were pretty much buying a project whose NPV was recently estimated at $1.5 billion. Okay, so you were pretty much buying a $1.5 billion project for only 85 million. So that's why I'm saying that I believe Oracle Resources is a pretty cheap stock. Now, what does this company do, after all? So, is Oracle Resources a miner? No. Oracle's goal is not to mine the copper in the ground. Oracle's Resources' goal is to confirm the copper reserves on its property, Santo Tomas, located in Sinaloa, Mexico, in order to sell this property to a mining company that in turn will finally mine the copper, will finally take the copper out of the ground. So that's Oracle's goal, to confirm the reserves in order to sell this project. And how much is this project worth? As you can see here, 1.5 billion after taxes. However, this study here was made using very conservative estimates. For example, this study used a copper price of only $4, while today copper is already trading above $6. So that means that Oracle's project is worth much more than only 1.5 billion. For example, this study also considered a silver price of only $24. Where is silver today? At $60. So that's why Oracle's project NPV is probably much higher than 1.5 billion. I think we could say this project could be worth 2.5, maybe more than $3 billion. And the prospects for copper are actually very good. I wouldn't get surprised to see copper trading at $10. And well, with that would mean that the value of this project would also go up. So that's why I'm thinking about buying this project. For example, let's say that Oracle is able to sell this project for like 30% of NPV, right? So if we use $1.5 billion as the net present value of this project, that would mean that Oracle would get around $450 million for this project. Well, from less than 100 million, which is the current market cap, to 400 million, that's 4x, and that's using conservative assumptions. So that's why I'm thinking seriously about increasing my position in Oracle, even though my position in Oracle is already quite significant. It is actually one of my main positions. And that's the reason also why I'm considering not buying more Oracle shares, because I think it would be better for me to focus on reaching a better balance in my portfolio to increase other small positions. So that's the first stock I'm here considering buying. And by the way, my average price in Oracle, as I always say, is at 30 cents. Okay, so let's talk about the second stock. The second stock is this one here, Reclaim. My average price, as you can see, is at 6 cents. And you see, I have a lot of conviction in this stock. I have a lot of conviction that this company will be successful and that this stock will skyrocket. So why am I considering Reclaim as an option? Because, well, what can I say? I think Reclaim is an excellent company. Okay, so what does this company do in the first place? So this company is a technology company. It has a market cap. It is a pretty tiny company. Here. Reclaim has a market cap of only $8 million. Okay, pretty tiny company. So what does this company do after all? You see, Reclaim operates as a marketplace of privacy-compliant consumer data. Okay, now, what does that mean? You know, several privacy laws have appeared in the US. They started in California, but now dozens of US states already have approved privacy laws. And the problem is that these laws establish that, for example, companies now need to get the users' explicit consent in order to collect their data. These laws also establish that companies now also need to give consumers the option to request the deletion of their data. So that's what these laws are about. Oh, but you can simply ignore these laws. Well, if you do that, the fines can be pretty heavy. So these laws end up creating a huge demand for privacy-compliant consumer data, right? I think we can all agree on that. Now the question is, where do you get that? Where do you get privacy-compliant consumer data at scale? Well, you can get that through some companies. And well, Reclaim is one of these companies. However, I think Reclaim is pretty unique because Reclaim operates as a marketplace of privacy-compliant consumer data. Now, what does that mean? That means that if on one side you have internet users, consumers, such as you and me, so if on one side you have users selling their data with consent, on the other side you have companies that want to buy this privacy-compliant consumer data so they can work properly. So that's pretty much how Reclaim operates. Reclaim operates as a marketplace of privacy-compliant consumer data. And why did I say Reclaim is an excellent business? Well, because first, it has a very strong network effect, in my view. It is also a very scalable business. We have a huge insider ownership as well here. For example, the CEO himself owns more than 1/3 of the company. He owns, I think that 35% of the company, something like that. So that means he has all the incentives in the world to make this company work, right? Besides, Reclaim is very well positioned to ride this privacy trend entirely, to ride this wave. And I think the demand for privacy-compliant data is set to explode. So Reclaim has the wind on its back. And finally, Reclaim has also excellent margins, for example. As you can see here, in the last 12 months, Reclaim's gross margin stood at 77%. That's excellent, okay? Phenomenal. Yes, it is true the company is still posting a negative operating margin. However, you need to understand the story. You need to understand the context. You see, for example, in the last quarter, Reclaim's operating margin stood at 19.9%, 20%, okay? Let's make things easier. However, in the third quarter of 2025, Reclaim's operating margin stood at negative 47%. Pretty serious, right? Now, that happened because the company was pretty much investing so it could grow. And now, these investments have come to an end, so that's why the company has posted this huge margin here. So, as I was saying, Reclaim is posting excellent numbers. The company has delivered a 20% net margin in the last quarter. The company also doesn't have, I think it has very little debt. Here, net debt, 0.2 million US dollars. So I think this is a very good business that is posting very good numbers. This company is also growing a lot. For example, if in 2022 Reclaim's revenue stood at 1.7 million US dollars, now this company is delivering 4 million in revenue. So a lot of growth, I think we can say that. And I think this company will grow much more. And well, for this company, I'm paying a multiple of only, how much? Enterprise value 8.4. So I'm paying pretty much 2 times enterprise value to sales for this company. Okay, it is not the cheapest multiple on earth. It is not the lowest multiple that I've ever seen. However, I think that is a fair multiple. It is a fair valuation to pay for this company, in my view. So that's why I'm considering buying. I'm considering increasing my position in Reclaim. The problem is that Reclaim is already a very big position of mine. So again, I think it would be better for me, even though I think the prospects for Reclaim are excellent, but I think it would be better for me to focus on balancing my portfolio. So instead of increasing these positions, such as Oracle and Reclaim, that are already big positions, so instead of doing that, I think I will increase other positions that are still very asymmetric plays, but that are still small positions. Now, the third stock I'm considering buying, and this one I think I will actually buy because my position in this stock is still small. So our next stock is Heartbeam, ticker BEAT. Heartbeam is listed on the Nasdaq, as you can see here. Now, in a few words, what does this company do? Heartbeam is another microcap. As you can see here, Heartbeam's market cap stands at only $28.2 million, while its enterprise value stands at 26. And one very important thing about this company is that this is still a pre-revenue company, okay? So of course, Heartbeam is still posting losses, as you can see here. But you see, I'm not buying this company because of its numbers. I'm buying this company because I think Heartbeam has developed a very unique technology, a very unique device. So Heartbeam is a healthcare technology company that has developed a device that is the size of a credit card. It has no cables, 100% portable. But the thing about it is that it is capable of assessing your heart with the accuracy of a 12-lead ECG, of a 12-lead electrocardiogram. Now, what's that? A 12-lead ECG is kind of like the gold standard to detect heart attacks, for example. Now, Heartbeam's device is not a 12-lead ECG. Instead, they synthesize one. But for example, it has already been approved by the FDA for arrhythmia detection. So that was a big win. And actually, that's why this stock skyrocketed here. Now, the funny thing is that today, I think this company is much better. And well, it is pretty much trading at its all-time lows, right? So I think we have a very big asymmetry here. So that's what this company has developed, a very small device that can synthesize a 12-lead ECG. However, they are also expanding the indications for this device. For example, they started a study about ischemia detection for heart attack detection as well, which would open a massive market, right? They now have just been awarded with a new patent. They've secured financing for at least another year of operations. And the most important piece of news, Heartbeam has also signed its first customers. So I think Heartbeam has progressed a lot. And again, this stock is trading at its all-time lows. But you see, why am I buying this company after all? Because, well, I think we have a very big asymmetry here. So for example, this company is being sold in the market for roughly $25 million, right? I mean, let's consider they need to dilute shareholders a lot, and that so let's say their market cap stands at $50 million, okay? Let's double the current market cap. Man, 50 million for the technology this company has developed, I think that's a fair price to pay. So in other words, I think the value of their technology alone is worth much more than the current market cap. And I think we'll soon see the first dollars in revenue coming in. So that will prove their business model works. That will be very important. So that's the third company, the third stock I'm considering buying this month. And now let's talk about stock number 4, right? So the fourth stock I will buy this month because I still want to build a bigger position here. So the next stock is this one here, MineHub. I've already talked a lot about MineHub here on my channel. I've already interviewed the CEO 3 times already. And you see, I have a lot of conviction in this company as well. Now, let me talk a little about this company. So MineHub is a technology company focused on the commodities industry. MineHub is not a pre-revenue company, okay? However, this company's revenue is still very little, around $1.5 to $2 million US dollars. I think that's the number, though I'm not sure. But in any case, this company's revenue is still very small. And as you can see here, MineHub's market cap stands at $25 million. And this company has pretty much developed a software that helps miners, that helps commodity companies in general to streamline, to track their entire operations. Now, I won't talk a lot about that. I think I've already covered that extensively, okay? Instead, I will already explain why I'm thinking about buying the stock. So I'm going to increase my position in MineHub because I think we have here another very asymmetric play. For example, the company spent around $25 to $30 million developing their platform. Okay, today it would cost much less than that because of AI. However, you also need to factor in their clients, the names that are already using MineHub's platform. For example, Codelco, which is the biggest copper producer in the world. Okay, so that must mean that MineHub software has some quality, at least, right? So Codelco, Sumitomo Corporation, Southwire. In an old presentation, I also saw Zijin Mining, Vale, BHP. So you have major names in this industry already using this platform. Now, how much is that worth? Anyway, my point here is that I think the ecosystem MineHub has built is worth far more than that, even though this company's revenue is still small. And I think this will change because, you see, they have more than 240 companies testing their ecosystem. Now, let's say they're able to convert 30% of that. So that would take us to around 70 names, right? 70 paying customers. Well, could MineHub deliver $10 million in revenue with, let's say, 50 customers? Well, I think that will be possible. Actually, if you see MineHub's presentation, you will see that their total addressable market is actually at like $600 million, being conservative. So the company could end up posting 60 million in revenue, maybe more. My point is, I think this company is very cheap because I think the asset they've built, counting with the names on the platform. So I think this asset is very valuable and that this digital ecosystem is worth far more than the current market cap. But I also think that this company is cheap in terms of future sales. And you see, people were afraid that MineHub wouldn't be able to convert demo accounts into paying customers. However, man, if you listen to my conversations with Andrea, the CEO, you will see that the number of paying customers went from like 10 in November 2025 to almost 30 today. So That's a lot of progress. So I think it's just a matter of time before we start seeing the effect of these new customers in the numbers. Anyway, I will increase my position in MineHub, especially since the stock has dropped a lot. Okay, now let's talk about the final stock of today's video. Finally, because I'm pretty tired. But okay, so the last stock I'm considering buying, and that I will actually buy, because again, my position here is still small compared to, for example, Oracle or Reclaim or Aduro Clean Technologies, which is another position of mine. I've actually never talked about this company here because other YouTubers cover this stock much better than I could possibly cover. So I just preferred to skip this stock. And the truth is that today it is actually my biggest position because it was my biggest victory. In any case, let's talk about the stock I will buy in August, which is this stock here, Adcore, listed in Canada, ticker ADCO, as we can see here. However, I bought this stock in the US, ticker ADCOF. Now, regarding this stock, I don't remember where my average price is. In any case, let's talk about Adcore. You see, Adcore is actually a company that operates in the digital marketing space. It has a market cap of only $6 million and an enterprise value of only $2.9 million. Meanwhile, Adcore has a net cash position of $3.2 million, okay? So the company has much more cash than debt on its balance sheet. And while its enterprise value stands at only $3 million, Adcore is posting $25.2 million in revenue. So this company is trading at an enterprise value to sales multiple of 0.12 times, okay? 0.12 times. Now, what's the problem with this company, right? It must be dying. Not actually. You see, it's true that Adcore doesn't have the highest gross margin in the world, but it has a good margin of 37.5%. It is still posting operating losses. However, I think this is about to change, and I will soon explain why. And you see, Adcore is actually a service-based company. I usually don't invest in service-based businesses. However, Adcore is an exception. Now, why I don't like service-based businesses? Because they're simply not scalable. I like very scalable businesses. I also like businesses with very high margins. And service-based businesses usually don't have these characteristics. However, that doesn't mean that to invest in a service-based business is a bad idea, right? It all depends on the valuation. But you see, even considering this business only as a service-based one, I think this company is still very cheap. But you see, here's the main idea regarding Adcore's investment thesis. So they have their service division, which represents 90% of the company's revenue. However, over the past few years, they've been developing some apps, some softwares, and this technology division is growing. The key thing here is that this new division has much higher margins, right? And is also much more scalable. So what I think will happen here is that over time, as this technology division grows, Adcore will start first growing more, right? It will also start posting higher margins. And with that, I think the company will finally start posting net profits in a consistent basis. So that's what I think will happen. And you see, in this company, we also have a very high insider ownership as well, which is something I really love about Adcore, because the CEO here owns like almost 70% of the company, okay? So this guy has all the incentives in the world to grow this technology division, because he will certainly make a lot of money with that. So that's why I decided to invest here in Adcore, because first, this company is already trading at very cheap multiples, even for a service-based business. So I think that even if this technology division doesn't grow. I think that the price of this stock will eventually go higher, will eventually adjust, because I think this is a very depressed multiple. However, if the technology division grows, I think we'll see a strong repricing here. And well, that's why I'm invested here. Anyway, let's finally end today's video. That's it for today, and see you next time.